Good morning, traders and students. This is FX Pathfinder from Market Traders Institute. In front of us is the MTI 4.0 charting software. We're going to review the Great British Pound US Dollar daily time frame. Current time is 9:11 a.m. The date is 6/29/2012. Now we take a look at the Great British Pound US Dollar daily time frame. We can see that overall this market has been stuck in a consolidation range, bouncing between support and resistance. For those of you who do not know what that means, take a look at my highlighted areas. Every time the market has touched this blue line, we have reacted bullish. We have reacted bullish several times. Very, very strong level of support. But we have to watch and track the market of this movement because it's, an 800 or so pip movement. Now, the market will not move in a straight line 800 pips. Well, it has a very low percentage chance of doing so. The market has a very high percentage chance of doing the following: making higher highs and higher lows, higher highs and higher lows. And so it looks as if this market has pulled back bearish, and it looks as if it's trying to form a low higher than this low. What that tells me as a trader is, you know what? This bearish movement that we've been experiencing, especially on the smaller time frames, is now over. The market is anticipated to continue to rally towards the north, towards the top of resistance. So I take a look at my 4-hour time frame. I can see how this market was in this down ABCD swing, a sub ABCD swing. I'm going to go ahead and delete that and focus in my capital ABCD swings. My capital ABCD swing says that the market has literally touched my 786 pullback to the pip. Since then, the market has begun to rally towards the north. Now, with my 786 pullback, the Ultimate Traders Package teaches with our Fibonacci's that the D extension is anticipated to be the 1.27. Now, I'm expecting this market to rally towards the north about another 205 pips. But again, the market doesn't move in straight lines. The market is anticipated to move in waves, making higher highs, higher lows, higher highs, higher lows on the way up. So what I'm going to do is I'm going to use what works. When the market breaks a trend line, you have a very, very high percentage chance the market will bounce to the backside of that trend line. What do I mean? Well, let's take a look at past history. The market's really good at repeating history over and over and over and over again. We have a down. When the market breaks this upward trend line, we enter into the sell zone. The market pulls back, bounces at the back side of this trend line, and watch how the market begins to fall. There it goes. Now, basically, I'm expecting the market to do the same thing again. I'm expecting this market to rally towards the north, form a high in the buy zone, pull back, bounce to the back side of this trend line, and then a rally towards the north, and I'm a buyer all day right here. On the 1-hour time frame, we're going to go ahead and start to reflect and draw the up ABCD swings. But basically, you can already see how the market already tested. It looks as if the bounce has already taken place on the 1-hour time frame. We may have a 4-hour bounce very, very soon. But take a look. This market is just beautiful at repeating past history. Down trend line, breaks the down trend line, rallies in the buy zone, bounces off the backside of this trend line, and then here comes the rally. It's just what the markets enjoy to do. They enjoy repeating the same things over and over and over again. All right, students. Well, this is FX Pathfinder from Market Traders Institute. If you're interested in learning more of how I'm able to analyze the markets, go ahead and log on to markettraders.com or come visit me in the Analysts on Demand chat room on forextips.com. This is FX Pathfinder.